Hi guys, a very good evening to all of y'all. Right. So today what I would like to discuss with y'all would be September December 2022's past paper, right, which is Sterling Co. Hopefully my screen is visible and my audio is audible to all of y'all, right? So this would be your question, right? Hopefully seen, right? It's a 30 mark consolidation question, but this question for the very first time they are requiring us to do the group profit or loss, right? Normally, group profit or loss is not tested always, right? Normally, group profit or loss is not tested always. But I would advise you all to redo this question whenever that is possible. Okay, let us now go to the question. So the question would be, right, from the background, the information that I need to grab is, right, out of the background, the information that I need to grab is that the financial year end would be 31st March 2009. Okay. Then my very first step, right, I would go and read the requirement, right? The requirement says that I need to use exhibit one for question number one and two, right? They want me to explain as well as they want me to include the calculations. So there are two requirements, two verbs, right? Two verbs are explain plus calculate, right? If I do both of this only, I'm able to get this 8 mark, right? If I do both of this only, I'm able to get this 8 mark, right? What do they need? What do they want me to calculate and explain? Well, they want me to calculate and explain the impact in my profit or loss by Berthold Co. Right? Okay. So what they want us to do is simple. If you need to grab 8 marks, I need to explain and calculate. What do I need to explain and calculate? The impact on my statement of profit or loss. Right? That is your 8 mark question. Okay. Let me go and read out my very first exhibit. Okay. I have bought 40%, right, of both Orco. I bought 40% for 25 million, right? So what does this mean? This automatically should trigger that this I am buying an associate, right? I'm buying an associate. How many, how much of ordinary shares that I would buy from that particular associate? Since I'm buying only 40%, right? He's an associate. How much ordinary shares I'm buying? I'm buying a share capital of 4 million, right? This, of course, I don't need to explain to you all because out of the total 10 million, I'm only buying 40%. So 40% of 10 million, $1 shares would be 40% into 10 million, $1 shares would be 4 million, right? I'm only buying 4 million of ordinary shares. When am I buying? I am buying it on the 1st January 2007. So you all need to understand, right? I'm not buying it at the year beginning of the financial period, right? I'm buying at a previous year because my year beginning would be 1st April 2008, right? This is a year before that, okay? And they have given us the opening retained earnings, which is 18 million, right? They have given us an opening retained earnings of 18 million. Well, let us read on, let us build on, and let us see why have that, where can we go and use this retained earnings to, right? And there are no other reserves, right? There is no other reserves, which means that normally in this particular question, there is only retained earnings. But in normal, you all could see there is share capital, share premium, retained earnings, general reserves, revaluation, any of that sort, right? But in this particular question, there is only retained earnings, right? Here it is. So you all know that automatically when you all saw the 40% itself, you all know that this is an associate, right? So whenever you are an associate, you all will definitely have significant influence. Your significant influence is for your financial and operating policy decisions, right? You all be able to significantly influence over the other company or over the investment company's financial and operating decisions, right? Okay. Now, in this question, they did not ask us to, define, associate, nothing of that sort, right? They only want us to define our calculations or explain our calculations and how that calculations affects the P&L, right? So that's our requirement. Okay. And after a few couple of months, right, on 1st December 2008, we are buying an additional 35%. Okay. So now what you all simply need to know is, see, you all are not buying this particular investment at one point at a time, right? You all are not buying it at once. You all are not buying it at once. You all are buying it step by step, right? You are not buying it at once. You all are buying it step by step, right? This kind of process is known as step up process. This kind of process is known as step up process or step acquisition, right? This is known as step acquisition, right? This kind of process is known as your step acquisition. Okay. So what I will say is initially you all had 40%, right? Because of that, you all were known as associate. But later on, after 8 months from your financial year, right? You all bought an additional 35% and you all retransferred yourselves to 75%. Due to this retransfer thing, right? Due to this retransferring, you all got the status of subsidiary. Now you all might be thinking, how is this going to impact my profit or loss? Well, let me complete. So, for most of y'all who has done financial reporting, right, you all would know that whenever you all have the status of subsidiary, you all need to start consolidating your financial statements, both the SOFP as well as your statement of profit or loss, right? In this particular question, you all will be only starting to consolidate, right? Let me change my pen. Only for 4 months, right? Only for 4 months. I need to consolidate what? My SOPL, right? I need to consolidate. Why I would say it's 4 months is, see, I only got my control or I only got my 75% ownership on 1st December, right? And the financial year beginning is 31st March, right? So automatically this would be December, January, February, March, 4 months. 4 months only I need to show my consolidation, profit or loss. So another question would arise among you all is, what would happen to the remaining 8 months? Well, it's quite simple, guys. Simple. The remaining 8 months, what I would do is, the remaining 8 months, I would calculate something that is known as share of profits, right? This share of profit is given to associate, okay? Right? This share of profit is given to this particular person known as associate. Here he is, right? Because for the very first 8 months during your financial year, you all were associates, right? I don't normally just go and invest. I need something in return. That return is known as my share of profits, right? And that share of profits is only calculated for 8 months. The remaining 4 months, I will start consolidating or combining my accounts or merging my accounts, right? Now, I'm not going to read this entire paragraph, right? I'm not going to read this entire paragraph. I'm going to start to, uh, you know, answer my particular question, right? Simultaneously, I'm going to work. The reason I'm going to simultaneously work is because I need to satisfy both of this. I need to calculate as well as explain. So let us start building on our answer scheme, right? Before that, what I would want you to do is, make sure that you practice this particular question in your ACCA practice platform, right? So that you all get yourselves adapted to that system. And, go and always read the marking scheme beforehand. The reason why I would say is that you all would know how is that 8 mark being allocated between your calculation and explanation. In this particular case, the examiner is allocating maximum of 3 mark for my calculation and the remaining 5 mark for my discussion. Okay. He doesn't want us to discuss in an elaborative form. No, as long as it is detailed and it has all the factors, you all will be able to get 1 mark per discussion. Right now, you all can see that my discussion is only just one line. The reason is because I'm just fully explaining, right? These are my pointers, right? Based on these pointers, I will be able to build up my answer, right? So what I would request from you all is, you all start looking at the pointers, or you all create your very own pointers and you all start, building up your answers. And if you all could, or if you all want, send it across to myself. I will check it on my WhatsApp or on my mail, and I will give you all a feedback in terms of your answers, right? Okay. Now, what I would like to say is, Before I start explaining this question, I would like to give you all a basic background understanding of step-up operation, right? And this basic understanding, I guess I had already explained in one of my webinars, which was done previously, right? If you all have not watched, go and watch it on your Google Classroom. For the people who are watching on YouTube, this has been uploaded, right? Step-up operation. Okay. Step-up acquisition means what is happening is, let me narrate a story to you all. So story for 2 minutes, right? I'm timing it now. It's 5:43. Okay. So what happened was, initially you all were associates, right? You all were associates who only had 40% of ownership, right? During that time, you all only owned, a small bicycle, right? A small bicycle you all had. But after that, you all know the investment was very good, right? You all had a financial growth and financial stability. Therefore, you all bought another 35%. Okay. You all bought another 35% and got your ownership re-elevated to 75% and got your status as subsidiary. Right. Simply what you all could consider is, you all from small car, I mean, I could say from small bicycle, you all bought in a car. You all were initially at a bicycle stage, and now you all have elevated your status to a car, right? This is what happens in step up acquisition. This is what happens in your step up acquisition, right? This is what happens in your step up acquisition, right? From small bicycle, right? From small bicycle, you all will be buying big car, right? This is how you all need to do your accounts. So from associate, you all are moving to subsidiary. Okay, this is all you all need to know. So now, whenever you all do step up acquisition, or whenever you all change your status from associate to subsidiary, right? You all need to consider that you all are going to sell your initial investment. You are going to sell this particular investment and repurchasing them back. What I would again repeat is, you all are going to sell your initial investment of associate and repurchasing back. Here, see, can you all see here? Can you all see here? I'm again repurchasing this 40%, right? So I need to dispose this off. I need to dispose my initial investment. Here it is. I need to sell him off, right? I need to sell him. I need to sell him, and again I will repurchase him back, right? When I'm going to sell this particular person, when I'm going to sell him, right? I'm not going to sell it at a loss, right? Always, generally, all of us would like to have a profits when we sell our investments, right? So when I'm selling that investment, I would need to calculate something called the gain or loss on disposal, right? Now you all might be asking me, why do I need to calculate this gain or loss on associate, or why do I need to calculate it? Well, it's quite simple, right? Where do I go and include this gain or loss? Where do I go and include this gain or loss? This gain or loss will be going and included in my statement of profit or loss, right? That is why I bought this into a result. So it's quite simple. Whenever you all are, retransferring your status from associate to subsidiary or any of that sort, right? When you all are retransferring your status, you all need to do step up acquisition. Step up acquisition simply means you all need to sell your small car or small bicycle, and you all need to rebuy or repurchase a brand new big car, right? And when you all are doing this particular process, you all will be having a gain or loss which will be generated. Why? Because you're selling your small bicycle, right? You are selling that small bicycle. I'm not going to sell my small bicycle at a loss. I will always sell them at a profit. And that profit needs to be recorded in my statement of profit or loss. Hopefully this is understood, right? If you all have not got it, please go and refer to my previous videos or webinars. You all will be able to, grab in some clarity. Okay. Now I'm going to explain. Now, can you see here? I have broken two parts, right? I have broken two parts because initially I did not get the subsidiary status. I initially have as associate, and later on only I builded up myself into subsidiary. So I need to show in both the impact. I need to explain both the impact, right? So I need to explain both the impact in terms of my P&L, how it's going to affect my P&L. Well, in terms of associate, there are only 2 points that I would like to explain. right? Number one is my share of profits. Number one is my share of profits. Okay. Number one is my share of profits. Hopefully, I know I taught you all, right? Initially, right, for the 8 months, we were as associates, right? I'm not just going to invest for the sake of investing. No, I need to get something in return. That return is known as share of profits, and that will be shown in my profit or loss under other income, right? How many months do I need to show that share of profits? I need to show that share of profits for 8 months, right? If your answer includes all this, right? If your explanation includes all these particular points, you all will be able to get your 1 mark in terms of your explanation, right? Show that you all invested for 8 months, you all will be getting a profit. That profit needs to be bifurcated for 8 months. That profit needs to be bifurcated for 8 months, and that will be shown in your P&L under other income, right? If you show this, you will be able to get your 1 mark. Okay. Now, my second point in terms of my associate. My second point in terms of my associate. Okay, what would happen is I told you, right, when I'm elevating my status or when I'm updating my status, right, from associate to subsidiary, I need to calculate something called gain or loss on associate. Here it is. I need to calculate something called gain or loss on associate. Why I'm calculating is I'm repeating myself. I am selling my small bicycle, and after that I'm repurchasing a brand new big car, right? Because of that, I will have some gains or I will have some losses. That needs to be shown in my statement of profit or loss, right? If you explain this, right, with your calculations, you will be able to get another one additional mark, right? You will be able to get another one additional mark because you are showing that how it's going to impact your P&L. Okay. But make sure that you give a proper explanation, right? Don't give some summaries, or don't give some minor explanations where the examiner doesn't understand. Okay. Okay, now let me move into my calculation, and after that I'll come to speak about the subsidiary, right? I'll come to speak about the subsidiary. How do I calculate this gain or loss on associate? Would be simple. I need to see the difference. I need to see the difference, right? I need to simply see the difference between my I need to see the difference between my carrying value and my fair value, right? The carrying value and fair value of my investment in associate, right? When I see the difference between them, any gains or losses will be transferred to my P&L, right? If my associate has profits, it will be shown as a income. If it has a loss, it will be shown as a expense, right? How do I determine whether it's a income or an expense? I just need to simply see the carrying value and the fair value, right? Any difference is to be taken to my P&L. Okay. Majority of the time, let me tell that also, this is mostly given, right? Only the carrying value you all will be needing to calculate. Only the carrying value you all will be needing to calculate, because fair value of the associate will be given by the examiner most of the times, right? 95% he will have been given to you, right? Okay. Now, let me go and calculate the carrying value. First of all, let me go and calculate the carrying value. You all know I bought this 40% for 25 million. So 25 million would be my cost, right? 25 million would be my cost. Okay. Initially, I bought this associate and I had an opening retained earnings, right? This was my opening retained earnings. Okay. This was my opening retained earnings. I did not know where to use it in the calculation. Well, here is the chance I'm going to use it into my calculation. Okay. I'm going to read it on now. Okay. Here it is. Retained earnings were 42.3 million. When was this retained earnings 42.3 million? Was it at the reporting date? Was it at 31st March 2009? No, it was on the date of acquisition. It was on the date of acquisition. Or when I bought the additional further stake of 35%, then my retained earnings was 42.3 million. So the difference, right? The difference between the opening retained earnings and the closing retained earnings is my share of net asset, right? Is my share of net asset. Okay. This would be from 1st April to 1st December, right? The difference between my retained earnings is known as my share of net asset. Now see, because now they have not given other reserves, right? My only net asset would only my net asset will only comprise of my retained earnings. Okay. That is why I'm only seeing the difference between the opening retained earnings and the retained earnings at the date of acquisition. Okay. That is why I'm calculating share of net asset. Okay. So to identify how much of gain that is given by the investment. Okay. Let us do that as well. What I would do is open my brackets. At the date of acquisition, I would have had a retained earnings of 42.3 million, right? From that, I would deduct my opening retained earnings. This would give my retained earnings, or this would give my profits, right? But this profit is for 100%. How much do I earn? How much do I own? I only own 40%, right? So my share of net asset would be 9.72 million. My share of net asset would be 9.72 million. Okay. Simple. I'm again telling y'all. The reason why I'm calculating my share of net asset is because in terms of retained earnings is because there were no other reserves, right? There were no other reserves, only retained earnings were remaining. So that's what I'm seeing the difference between the opening and the date of acquisition retained earnings. The difference into 40% will give my share of net asset. Okay. So now, how much would be my carrying value of associate at the date of acquisition? Okay. How much would it be? It would be 34.72. So when I'm going to sell, right? When am I selling? I'm selling on 1st December 2008. On 1st December 2008, right? My carrying value would be 34.72. 34.72 will be my carrying value. Okay. 34.72 will be my carrying value. Right? Carrying value. My carrying value will be 34.72. Right? Now, how much is my fair value? Right? How much is my fair value? Normally, I told at the date of acquisition, normally examiner as a habit, he would give you all. But in this particular question, he wants us to find. No problem. Let us find. It's quite simple. Right? I will use a green color pen for that. Let me use a green color pen. Here it is. The market price. Automatically that you all should know, market price is your fair value, right? Anything that is sold at market, it's your fair value. So the fair value of Berthold Co. or Berthold Co. immediately prior to 1st December 2008 was 9.20 per share, right? So what do they indirectly mean is, right? On 1st December, you all were planning on selling your investment in associate, right? At that date, the market value was 9.20 per share. Okay. So how many shares did you all have? How many shares did you all have? You all had 40% of 10 million shares, right? And now the share is 9.20, right? So the fair value of my associate would be 36.8 million, right? It is 36.8 million. Let me show that as well. Let me show the breakdown of that as well. Okay. You all had 40% of 10 million shares, and now that share price is 9.2. On 1st January 2007, it was just only 1 rupee or $1, I would say. but now it is 9.20. It has, increased. It has increased, right? Because of that increase, you all will be needing to calculate something called gain or loss. Can you all see the gain or loss would be the difference between your fair value and your carrying value, right? Which is 2.08. Okay. Okay. These all you need to include in your calculation and explanation. You all need to find this particular component. You all need to find this particular component, the gain or loss. How do you all calculate the difference between the carrying value and the fair value? Normally, examiner gives you all the fair value, but in this particular one, he did not give us. But we were able to find it. How we were able to find it? We simply took the fair value per share and calculated, right? And we saw the difference between the carrying value and the fair value at the date of acquisition. We were able to find out the gain was 2.08, right? This gain of 2.08, right, will be needed to be brought into my P&L. Okay, this needs to be brought into my P&L. Okay, until this, if you all explain, you all will be able to get, say about 2 marks for this. If this were properly explained, 2 marks, and for this particular calculation, 1 mark. For this particular calculation, 1 mark. Okay. So now you all altogether you all have 3 marks. 2 marks for explanation, 1 mark for calculation. Okay. Now I'm going to calculate the subsidiary. Now I'm going to calculate the subsidiary. Okay. What you all need to now, this is also pointers, right? These are pointers. These are not detailed answers. You all can read in. You all can write. You all can read in the examiner's report, and you all can get in his detailed answer. Okay. And I would say, as always, I'm repeating myself, don't go and try to, write as per examiner, because see, y'all are right. The difference between y'all and him is that y'all are writing under strict exam conditions. He is taking his very own time and, he's explaining it, in detailed manner. Y'all don't need to do that. Y'all need to do your exams within 3 hours. So y'all are doing under time conditions, very detailed time conditions. So y'all know, as long as y'all explain the relevant points, y'all will be able to grab your 1 mark. Okay. Okay. Now we move on to subsidiary. Okay. Okay. What does the subsidiary say? Okay. So y'all can speak about something about control, right? Y'all can speak about, now y'all are having from 30%, y'all went to, sorry, from 40%, y'all went to 75%. So there was a step up acquisition, right? Y'all need to consolidate for the remaining 4 months. Here it is. Here it is. Speak about this remaining 4 months. The reason why I want y'all to speak about this remaining 4 months would be because this remaining 4 months is going to be shown in your P&L. All right. Hopefully, I'll remember the requirement. The requirement said that you all need to speak about the impact on my P&L, right? So you all need to speak something about your impact on your P&L, which would be, I will start consolidating. If I'm going to start consolidating, I will consolidate for only 4 months. The profit or loss would be only taken for 4 months, right? Okay. You all can speak about that. Okay. You all can speak about that. Okay. So there is 2 marks here for explanation. There is 1 mark here for another explanation that will give you all three plus calculation of gain on associate will give you all 4 marks. So I'll need only another 4 marks. Okay. Share of profits for parent. How much would be? That would be, guys, that would be here. See, can you see here? That would be, can you see here? The reported profit for the year ended 31st March, 11.1 million, right? This 11.1 million is for how many months, guys? It's for 12 months. But you all got the status of parent, or you all got the status of subsidiary only for 4 months, right? For 4 months. Okay. And remember, you all are only getting 75% of the share, right? Remember this as well. You all are only getting 75% of the share. So this only will be the profit attributed to parent. This will be profit attributed to parent, right? Let me show that workings as well. 11.1 million, I'm again repeating myself. 11.1 million was the entire group profit. It was the total 100% of the group profit, but I only have 75% of ownership. So I only need to take 75% of profits. Another point that I would forget is that I'm only doing consolidation only for 4 months, right? So I only need to take 4 months of my profit for parent, right? This, if you show, you get another 1 mark, right? If I show this, I'll get another 1 mark. Okay. This, if I show, I'll get another mark, 1 mark. Let me show that as well. Here, see, can you see here? Can you see here? 2.08 was my gain or loss on associate, right? Hopefully that's correct. Yeah, 2.08. Okay. 2.08. Okay. Now, moving on. Can you see here? Okay. Now, profit or loss in terms of NCI. See, you all know, right? When you look into the format of your consolidated statement of profit or loss, you will show total profits. First, you always show this total profits, but you all need to bifurcate this. You all need to bifurcate this between your parent and your subsidiary, right? You all need to bifurcate or segregate. You all need to bifurcate or segregate between your parent and your subsidiary. Your parent was 75%, your subsidiary is 25%, right? But he was also only your subsidiary. He was only a subsidiary for 25%, and he was your only subsidiary for only 4 months. So in your P&L, you all need to show only for 4 months at 25%. You all need to show 0.925 as your NCI, right? As your NCI, you all need to show this much. Okay. So this would get you all another 1 mark. This would get you all another 1 mark. And if you all explain that very well, right? If you all explain how the impact on NCI, you all need to tell about the 4 months. You all need to tell about the 4 months, right? You all need to tell about the 4 months. And if you all speak about 4 months and 25% impact, you all could get another mark in terms of explanation, right? So this also you all could get. Okay. This also you all could get. Right. And after that, simply take this particular parents allocation and you all could, incorporate within your explanation number 3. Okay. By doing this, I would say at least you all can get minimum 6 marks and maximum would be 7 marks depending on your answering skills, right? This is all you all need to know. This is all you all need to do in terms of your first requirement, which is question number 1A part, right? Which is question number 1A part. You all need to show your gain or loss. The summary would be you all need to show your gain or loss. Why you all get a gain or loss? Because you all do step up acquisition. Because of doing a step up acquisition, you all will be getting a gain or loss of associate. That gain or loss will be taken to my P&L, right? That is number 1. Okay. Number 2, right? When I'm doing consolidation, I need to share it my profits between my parent and subsidiary. Sorry, my parent and my non-current interest. When I'm doing that, right? I would segregate between their ownership, which is 75:25. But this time it's only for 4 months, right? The important point that you all need to remember is for 4 months. All of us would forget that we would not go and include 4 months, right? And you all could calculate something called share of profit per associate, right? Hopefully, I'll remember that as well. Share of profit for associates. There is something here, is 925,000. We got that as well, right? There is something called here. You all need to explain about 4/12. You all need to explain about 4/12, right? Because you all only utilizing it for 4 months. Okay. Uh, Here it is 2.08 million, which was the gain or loss, right? Okay. And share of profit of associate. Let us go and calculate that as well. Share of profit of associate. Let us go and calculate that as well. How much associate would get? Right? But associate also will only get for 8 months. Right? Associate will only get for 8 months. Right? Sorry. Associate will only get for 8 months. The profit for the year would be 11.1 million, guys. The profit for the year is 11.1 million, right? He will only be getting a profit of 40%, right? But his profit is only for 8 months, right? It is not for 12 months, it's only for 8 months. So his share of profit would be 2.96. Okay, here it is. If you all show all of this, you will be able to get your marks, right? Share of profit. Okay. Okay. So that is it in terms of your first question. Okay. If you all have not understood, please try to watch the video, right? And if after watching the videos, if you all don't understand, drop me a WhatsApp message, right? We could discuss on where you all are finding it troubling. Okay. This would be the share of profit of associate. He will only for 8 months he'll get profit of your 11.1 million group profits. Right? This is it. This is it. We are done with our very first question. Right? We are done with our very first question. Let me take 1 minute of break. Let me right? Okay. Now, see, we are not still done, right? We are not still done. We are only done with our very first question. Okay. We are only done with our very first question. We have another question. Using the exhibit one, we need to calculate, we need to explain and show, right? We need to explain and show how the goodwill would be calculated. So that's also again for 6 marks, right? That's also again for 6 marks. So I guess it might be 3-3. It might be 3-3, right? It might be 3-3. Okay. We now, what I would simply mean is they want us to calculate goodwill at the date of acquisition. They want us to calculate goodwill at the date of acquisition, right? Most of you might know how to calculate goodwill at the date of acquisition, right? Alright, guys, your goodwill at the date of acquisition is quite simple. Let me remove all these figures that are not needed. Let me remove all these figures that are not needed. Let us do this calculations freshly. Okay. You all know how to calculate goodwill, right? You all know how to calculate goodwill. Here, see, maximum for calculation 3 marks, maximum for explanation 3 marks. So 3:3. Okay. So you calculate goodwill. How do you calculate goodwill? The cost of that investment would be you all are buying it for 41 million, right? You all are buying it for 41 million. So you bought it for 41 million, the 35%, right? But the 40% of your initial investment, right? Your 40% of your initial investment, would you record it at the cost or would you record it at the fair value? Normally, what does IFRS 3 says that IFRS 3 states that whenever we are calculating goodwill, right? Whenever we are calculating goodwill, we need to bring them to fair value. we need to bring them to fair value, right? So that 40% of associate must be bought at fair value, right? You all don't need to again go and calculate. You all already know the fair value. Here it is. The associate's fair value of 40% fair value would be 36.8 million, right? Simply copy it and paste it. It's not me who said it, right? It's not me. Always, when you're calculating goodwill, goodwill has to be in fair value. Goodwill has to be in fair value, right? It is according to IFRS 3. If you all speak about this, you all will be able to get your 1 mark, right? You all will be able to get your 1 mark. IFRS 3 and all of this, the goodwill will be needed to, your NCI, your associate, your net assets of the subsidiary, all of them will be needed to remeasured to fair value. If you mention that and if you calculate that, you all will be able to get your 1 mark. Okay. This was simply given. The cost was simply given. Obviously, when you're buying, you'll buy at a market rate, right? That's obviously it's in your fair value, right? And now, how much would be your NCIS value? How much would be your NCIS value? Let me again change off my pens. What color would you prefer? Would blue be fine? Yeah. Sterling Co measures NCI at fair value, right? They measure them at fair value. Obviously, you know there are two measurements, right? You have studied there are two measurements. One is your fair value method, one is your net asset method. But in this, they're using a fair value method, right? Okay, so they want us to measure it at fair value. Okay, simple. You all know this. I of course don't need to do it at all. You all own 25%. NCI will be given 25%. How many shares he would have bought? He will have 10 million out of 10 million, he'll have 25% of the shares. And now the share value at the date of acquisition, here it is, at the date of acquisition, which is 1st December, would be 9.20. So the fair value of net asset of non-current, the fair value of non-controlling interest would be 23 million, right? Okay, let me show those workings also so that you all know. Okay, that would be 25% you own out of 10 million shares you own, and now the market rate at the date of disposal, right? At the date of acquisition, right, would be 9.20 fair value, right? If you know this is fine. This how did I come? It was simple. Refer sheet 1, right? Okay. So now guys, my total investment would be my total consideration or investment would be 100.8 total consideration, right? This would be 100.8. This would be 100.8, right? But now you all know goodwill, how goodwill are calculates the difference between your total consideration and your fair value of net asset of the subsidiary at the date of acquisition, right? So it's your fair value of the net assets of the subsidiary at the date of acquisition. Okay. Now where is this given? Where is this particular part given? Fair value of net asset. Here it is. Now, guys, I know that I'm able to spot it at a glance is because I have done this question, right? When I did my exams, and I did after when I did some other 2 or 3 batches, I would have done it, and now y'all. That is why I'm able to soon identify. But if y'all have gone and read this, y'all also will be able to uh spot on the exact points that is needed. Okay, here at the date of acquisition, when the fair value of the identifiable net assets and liabilities was 55.3 million. All right. It was 55.3 million. Okay. Is how much? It is 55. 0.3 million. Okay. So from your total consideration, you minus your fair value of net assets at the date of acquisition, it would give you a goodwill of 45.5. Let me go and check whether that's correct. Okay, yeah, we are correct. It's 45.5. Okay, 45.5. But the reason, but most of you all might be thinking, but most of you all might be thinking, right? Why did I break this off? Why did I break this off? For the people who have read this question, you all be understanding. For the people who have not read this question, well, let me explain it with you. Okay. At the date of acquisition, right, your net assets in your birth hold co was, or the subsidiary had a net asset of 55.3, right? A retained earnings was 42.3 million, right? Birth hold co is there, right? Birth hold co, his retained earnings were 42.3 million. Okay. The difference between the fair value and their carrying amounts are non-depreciable land. Hopefully, I'll remember that sometimes your fair value and your carrying value are not the same. The reason might be because of your revaluation adjustments or your upward adjustments that is there. In this question, there is an upward adjustments in terms of land, right? In this question, there is an upward adjustments in terms of land. How much that upward adjustment would be is simply your fair value of your net assets was 55.3 million, right? Out of that, you all know that already 42.3 million is for your retained earnings. The difference would be 13 million, right? The difference would be 13 million. Well, in your question, this is not required, right? You all are not needed to show one meter, 1 minute. Okay. Let me be honest. Y'all are not needed to be showing this 13 million upward adjustment, right? Y'all can just simply show that because the examiner has given 55.3 million fair value of identifiable net assets directly, y'all don't need to show this 13 million. But why am I telling you all to show is, see, this is a non-depreciable land, right? Suppose if it was a depreciable land, right? So, I mean, normally all don't depreciate land. Okay, let me take an example. Suppose if it was a depreciation of a building, right, and that building had an upward adjustment, obviously that depreciation would have not been recorded in your 11.1 million investment. Let me again reterm it, right? The reason why I showed it rather than simply showing us 55.3 million and finishing off my calculation, the reason why I, bifurcated both of these people is normally when you have an upward adjustment, right, those upward adjustments won't be included in your profit or loss on or in your SOFP, right? Right. So normally there will not be any impact in terms of a depreciation. Okay. So you only need to go and calculate, right? You only need to go and recalculate for the depreciation what is 13 million. But since this is a land is non-depreciable, there will not be any impact, right? No impact to P&L since this is a non-depreciated land, right? Suppose if it was a depreciating element, obviously you all need to calculate for this 13 million upward adjustment, you all need to calculate depreciation, right? And that depreciation, you all need to go and show it under your P&L, right? You all need to show it under your P&L, okay? You all need to show it under your P&L. You all will need to, time a portion it if it's, bought in the middle of the month, and as well as you all need to go and show it for 75%, right? Since this question is non-depreciable land, you all don't need to calculate depreciation on uh, more dip on upward adjustment. right? We are left off with 8 minutes more. We are left off with 8 minutes more. I'll conclude my session at 6:30 and I'll upload the remaining in another webinar. Okay. So now I have done all the calculations in terms of my goodwill. Impairment. Okay, why I did okay, here it is. Goodwill is not impaired, right? They have told us goodwill is not impaired, so this became zero. So there is no impairment during the year, right? There is no impairment during the year. So goodwill at the date of acquisition would be your goodwill at reporting date, right? At date at I'll write it in in a short term date of acquisition, right? At date of acquisition, your goodwill was 45.5. Since there is no impairment, that would be your reporting date goodwill. Okay, that would be your reporting date goodwill. This is all I need to know. Now let me soon move into my explanation. Right? What I would say, I would simply say, okay, let me say how I would say is now how do I calculate goodwill? Right? I would calculate goodwill, the difference between my total consideration and the difference between my fair value of net assets at the date of acquisition, right? And in case I will explain that, right? That will give me 1 mark. And if I want to further elaborate, what I will start is, simply beating about the bush. What I would do is I would speak about impairment. See, if this was since this is a fair value method, right? The impairment, if there was an impairment, that would be needed to be bifurcated between a parent and a subsidiary, right? Since this fair value method, right? This fair value method, 75% and 25%, right? How I would say is the double entry would be is debit, right? Debit and credit. I will go and credit goodwill because goodwill will be reducing. Goodwill will be reducing, and I'll go and debit my 75% of my group and 25% of NCI, right? If I speak about this or if I show, this double entry, I might be able to get a 1 mark, right? Another mark is I would like to speak about fair value, right? Bring in IFRS 3 for the people who have studied, bring in IFRS 3, right? Bring in IFRS 3, speak about that whenever you all are acquiring a new subsidiary, you all need to calculate all at fair value, right? All at fair value. You all can speak about that. Another point is, see, now this was already given, right? There's no point of you speaking about cost. Fair value of associate, we already spoke in the previous lesson. This 25% of NCA, you all can speak. This 25% of NCA, you all can speak, right? This is an additional adjustment. This upward adjustment, let me add that also. Speak about upward adjustment. You all can speak about that. You all can speak about no impact on DIC for this specific asset. Normally, when there is an upward adjustment, guys, you need to calculate depreciation, and that depreciation you need to show it separately because that would have not been included. But since this is a land, non-depreciated land, therefore there is no depreciation. If you all speak about all of this, you all be able to get your 3 marks, right? Go and read this. Go and read this. Okay. Go and read this. Try to grab in those points that is needed. You all be able to get your 3 marks. Right? Okay, let me show that as well. Since we have now 3 minutes more, let me show that as well. What part is important? What are the important points? Okay. Here, see, they are speaking about goodwill. How do you calculate goodwill? Right? How do you calculate goodwill? This is how to. And if you all simply speak about that, you all can get it. Right? 1 mark there. Okay. Another mark would be here, see the fair value of NCI. How do you calculate the fair value of NCI? That would be 1 mark, right? Here it is 25%, right? If I'll simply speak about these adjustments, let me mark it in blue file. If I'll speak about those adjustments, you will be able to get a 1 mark, right? This one, speak about this one, right? Speak about this one. If impairment was there, you all could have spoke about this one as well, right? If you all speak about this, you all be getting your 1 mark, right? Okay, I will conclude my session with this, right? Since I'm only recording this, right? Hopefully, this will be uploaded by a day or two in your both YouTube's as well as Google Classrooms, so that you all are able to access it. If you all have any doubts in terms of this question, please let me know. I'll respond to you all on WhatsApp, right? Apart from that, we are left out with we are left out with two questions, B and C, right? I will upload this in another webinar. Don't worry, I'll make sure that it's done within today or tomorrow. Hopefully, I'll enjoy the lectures, right? I have told you all what are the 2 marks that is given here. These 2 marks, and this would give you all 1 mark, right? If you all are able to get the 3 marks, it's totally good. All right. And for the people, you all can start, reading. Don't need to write all these marks, right? Don't need to write all these marks. You all can just go and look into your examiner's marking scheme. Look at examiner's marking scheme and identify how does he allocate marks for your explanation. And according to that, you all start writing, right? No problem. You all can write it. One time you all might not be able to get it. 2 times you all might not be able to get it. But I would say the more you practice, the more improvement that you all will be see in your explanation. Okay. If that is so, good evening to all of you all. Have a very good night and see you all in the very next session. Thanks a lot, guys.